Ladies and gentlemen, good day and welcome to the 2Q FY23 earnings conference call of MSTC Limited, hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ansh Manek from Equirus Securities. Thank you, and over to you, sir.
Thank you, Rotuja. Hello, everyone. On behalf of Equirus Securities, I welcome you all to Q2 FY23 earnings conference call of MSTC Limited. From the management, we have with us today Mr. Subrata Sarkar, Director of Finance, and Mr. Ajay Kumar Rai, Company Secretary. We will begin the call with the opening remarks on the management, and then we can open the line for question and answers. I now hand over call to Mr. Subrata Sarkar. Over to you, sir.
Yeah, this is a very good afternoon, dear investors, and happy Dussehra and Diwali. So it is all along the results you have already, I think it has been published, and you are all aware of the results. So the result, what I want to say is two basic highlights. One, as promised earlier, it is based on the e-commerce driven growth, number one. And number two, of course, the e-commerce earnings are on a steady path right now as we compare with the quarter one. And if we compare H1 of earlier year, of course, it is a very, very good, robust growth that can be seen by the numbers itself. Now I'm going to the detailed little bit of the results. So if we go by the revenue part, so the revenue has, of course, a little bit dipped from 312 crore to 277.25 crore. And basically, it's marketing 176.36 to 92.40. E-commerce, of course, has grown up from 124 crore to 167.70 crore, a robust growth of 35%. And others have also gone up a little bit.
I'm sorry to interrupt you, sir, but you are not clearly audible.
So right now, can it is audible?
Yes, it is audible? Now it is. Please go ahead.
So I am in this posture only. Okay. So again, I repeat that the total revenue has taken a little bit deep, but it is basically due to the marketing, 176 crore, 0.36 crore to 92.40 crore. That is a dip by around 50%, which is in the expected line as we have promised earlier also. And the e-commerce has taken a 35% growth, one from 124 crore to 167 crore. And others, of course, has a insignificant role in this whole episode. So EBITDA has grown from 102 crore, 0.44 crore to 224 crores at a robust growth of 120%. And provisions and write-off and that's almost not there. And profit before tax has gone from 83.23 crore to 145 crore, and PAT from 52.59 to 115.32 crore, a growth of 119%. And cash profit has also gone from 69.39 crore to 196 crore, a growth of 182%. If we go by the segmental part, so total value of goods traded MSTC's ecosystem is 919.62 billion as compared to previous half one of 710.60 billion, a robust growth of 30% of revenue traffic, goods traded traffic. And accordingly, it is reflected in the profit part also. If we go by the group part also, the revenue has taken a dip of around 7%, from 501.92 crore to 463.72 crore. And of course, the marketing has gone down, it was explained earlier. And scrap and allied recovery jobs, which is basically a part of our subsidiary group company, Mr. FSNL Ferrous Scrap Nigam Limited. It is on a flatter trajectory from 201 crore 2203 crore is almost on the flatter trajectory. So PBT in the group as a whole has grown from 99.44 crore to 154.53 crore, and PAT, of course, has almost doubled from 61.85 to 117.96 crore. So summary PL statement are also enclosed. So this is all about our financial performance. And so far, I would like to add, we are trying our level best to diversify in this field of e-commerce, and trying to there are two-pronged strategy, trying to strengthen our existing business lines of scrap and others, and going to diversify in others. So with that, we expect that the third quarter will also be going on the same philosophy and same path. Thank you very much. Hand it over to you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, good morning and congratulations on a good performance. My first question is regarding the standalone numbers. So there is a other income of 103 crore and there is a provision and write-off of 78 crore. So is there any correlation, and what is this regarding both, if you can answer for both the entries?
Thank you, Mr. Joshi, for your kind words and the praise for our results. So you are absolutely right. As I say as a very experienced reader of the financial statement, it is absolutely correct. So we had made around 77 crores of write-off this quarter. So it is appearing on the both sides. So we are no longer written back. It is part of the other income, and same charging into profit and loss account as a bad debt written off. So it is setting off, so nothing to do with our profitability. So this to be very precise and clear, only a minuscule amount of 0.95 crore, that is almost, if you can take it, and 1 crore has been made a provision against the bad debt. So that era of making provisions for bad debt is over right now, that we can see, as of now, we can perceive.
Okay. Now, if I net off this 78 crore provisions, despite that, our other income will be, let's say, if I remove 78 from 103 crore, still our other income is almost 25 crore. So, does that include any other one-off, or that's a pure treasury income or something like that?
It's basically, if you see, it is basically investment income, and it is basically some dividend we have received from our subsidiary. So it comprises of both. So that is there.
Okay. Now, my second question is, so I'm asking through standalone numbers only. So our trade receivable is now 350 crore. Can you just break this up into marketing business and e-commerce business?
So, yes, if you just give me the so it is basically that old trade receivables which were, am I audible?
Yeah.
So that's 300 order, that is the trade receivables that we have. Our e-commerce trade receivables is at around 60 crore. Balance pertains to marketing, but maximum of it is backed by 110% BG, and almost 99.9% is the safe and requires no provision. That much we can tell you, sir. It is basically maximum is backed by 110% BG, and other things to others are in the associate model. So it requires, as of now, no provision, and we do not envisage any provision against this trade receivable, except from the e-commerce, where a minuscule has been made that I mentioned you earlier. So that is there, sir.
Okay. Now my third question is also regarding the balance sheet. On the liability side, we have two big items. One is 145 crore of trade payables and 909 crore of other financial liabilities. So what is both these comprise of, and if you can break that also in terms of marketing and e-commerce?
So basically, in the trade payables, maximum is the marketing. So we have got a both sides, trade receivables and trade payables in the associate model. Already, as we have explained earlier also, we have got an agreement with our creditors that once we receive it from our debtors, we will pay them. It's a back-to-back arrangement.
Yeah.
So it is like that. So once it has got nothing to do with in our PL part. We cannot write it back, or we cannot write it off from the debtors also. So it has got nothing to do with our profitability. Balance, certain payments are coming and going, like Post Office Act and all these things. So the balance is that type of liability. So it has got nothing to do with our profitability as such. So that much we can assure you, sir.
And about this 900 crore of other financial liabilities?
So these are the certain receivables, certain payables we have collected, and generally it is a temporary phenomena which on a particular balance sheet date it remains. So it will go off and come in like that. So it has nothing to do with our profitability and trading business.
But that's also include majority from the marketing business?
No. It has nothing to do. The majority is not from the marketing business. It basically it is around 78 crores, around audits for some other things, but basically it is not from marketing business. You can see that our 31st our annual report. I would like to request you to see our annual report where the total area-wise breakup is there, and nothing major has changed out of that as on 30th September, sir.
Okay. One last question. So let's say this trade payable of 145 crore and 900 crore of other current liabilities, that's around 1050 crore. And on the asset side, we have a 350 crore receivable. And also our cash balance is more than 1,000 crore almost. So if I net it off, is it fair to assume that our own cash, not against the advances or not against any payable, but our own earned cash is almost 350 crore?
So that's the method of mathematics. So you have yourself calculated. We have not checked that, not in a position to check that mathematics. But when we have checked, so it's okay. If the mathematics comes out of that, so we have nothing to say. We have disclosed everything in the balance sheet. So.
Okay. And one last question. So how do you see the momentum of e-commerce business from last couple of quarters? We are doing 80 crore plus revenue. How do you see the momentum going forward? And is there any highlights? Because this time on the presentation, we have not given any highlights like we usually give that which are the major projects behind it.
Actually, the highlights we thought typically it was whatever we did very good. That is, numbers are telling, but you see, it is basically the events that were repetitive in nature. So that's why we thought let us not repeat that the same type of things in the presentation. That's why we skipped that thing. And basically, that momentum is there, as you can see from the figures. And so long as that industrial atmosphere is also picking up, so we expect that e-commerce oriented growth may sustain. We may sustain. With, of course, that is very difficult to say for the last quarter and all. So coming quarters also the momentum we may maintain.
Okay, fine. I'll join back in the queue. Thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Harshit Jain from RAH Investment and Advisor. Please go ahead.
Yeah, hi. First of all, many congratulations for a great set of numbers. So my first question would be regarding in this particular quarter, we can see that there is a decline in the employee cost from QoQ on basis and on Y-on-Y basis. So can you please clarify, and will this be the same run rate going forward, 18 to 20 crore per quarter?
Jain sir, what is happening over here? So if we take like it is a very minuscule decrease. It is around in the tune of 1 crore. That is not even in the percentage per se. So it keeps on a little bit of fluctuating. But if we can go by the H1 basis, H1 to H1, of course, the last quarter, that last H1 was marred by COVID, and we had to spend a lot of money on our health issues of our employees. That was our prime importance. So that was some kind of expenditure that we made it. So, but you see that around what we have told right now, if you see our total overhead, if you compound it on annualized basis, it will be in the range of 100 plus crore, and around 100 crore. So we hope with this employee strength, we will be able to meet around 100 of overhead this way. That way, so sometimes some 1 crore less, some 2 crore plus this way, that way.
Okay, thank you. And my next question would be regarding our marketing segment. So can you please provide a guidance that how much will be our marketing segment on quarterly basis going forward? Because last quarter it was around 10 CR, and this quarter, because of provisions and entries, there is no clarity. So what will be the growth rate going forward?
Marketing, you see, we have already tapered down. Only our one segment, 110% BG back segment is going on. So that is the fourth certain, that is the philosophy, that is the thing that we are maintaining, that in the near future we are not going to have this kind of risky business. And the second thing that we told about the provision, so it is not the provision. We have made a provision of only 0.95 crore, that is 95 lakhs only. So very minuscule, not in the marketing division, in the old some e-commerce state, receivables. So it is a both sides. It is the other income side, and basically we have written it off. And what you can see that we have taken a tax advantage. The tax is a little bit low. By writing it off, we have taken the tax advantage of that. So marketing is now, of course, is a very, very least priority segment in our company. So we are now focusing on e-commerce. Right now, what is the outlook is there?
Okay, thank you so much. And my last question would be regarding our e-commerce segment. If it's possible, can you provide a little bit guidance that what is the kind of percentage growth we are targeting in this current financial year for e-commerce?
So you see that if you can what you can see from the market and the overall thing, although we are on a flatter trajectory so far income is concerned, but you see, as a perspective, we see it as a growth, because you see the prices have a little bit scrap and other things have gone down. So with that pressure, we have maintained the same revenue level. So that is a growth, number one. Number two, we feel that there will be a constant competition and there will be a price pressure. And of course, that will have a bigger impact on our growth numbers. So we are trying our level best, but we feel that we can maintain the trajectory, as I answered earlier in another question also. So we can maintain this trajectory so far current quarter is concerned. But the very volatile market, as you are all aware, how it happens we do not know. The world is now very volatile, so that is there.
Yes, so around 80 to 90 crore per quarter.
It is now, it is a consistent first quarter, second quarter we have made it. So we are expecting that it may happen in the third quarter. But what about fourth quarter? And it's very difficult to say because, longer predictions right now in the days is a very difficult proposition. But of course, we have time and we hope that this e-commerce oriented growth will remain with this company.
Thank you so much and wish you all the very best for next quarters.
Thank you. The next question is from the line of Srinivas Reddy, an individual investor. Please go ahead.
Yeah. Good morning, sir. Yeah,
good morning, everyone. You are fine, I hope?
Yeah, fine. Thank you, sir. Right.
Okay.
Yeah. This is regarding the other income. Earlier, we had also gone through this cycle of abnormal increase in other incomes. And then that obviously is continuing. When can we hope that this normal business income will overcome that abnormality of the other income rising part? At least next few quarters, we can expect a secular trend, non-linear growth we are seeing right now, but for the regular income. Yeah. So when can we expect the linear growth for our company from the business growth, actual business growth, excluding that other income part? Yeah.
Sir, let me clarify you, sir. So you see that if you can deeply analyze our financial statement, standalone or consolidated, whatever maybe you are looking at. So there is, of course, other income, but there is you see the provisions and write-off. It is basically a compensating entry of around 77 crore that we have written out this year, this quarter. It is appearing on the top and this is appearing on the bottom. It is just basically an accounting entry. It has nothing to do with the profitability. We are riding on our operational part only. And if you can see from that operational income, operational part, let me explain you very clearly. If you can see, I'm just explaining one quarter, H1 only. If you can see that H1, let me explain you for you. So if you see that our revenue from operation this H1 is 163.30 standalone basis. Okay. And if you see the other, if you reduce the 70 crore part from that other income, to you can see the other income is 37 crore, and total income is around 200 crores. And if you reduce the overhead of 50 crore, so PBTI EBITDA comes to around 150 crore, and after provision it comes to only 148 crore, and profit before tax is 145. So you see that 145 mainly is derived from 163 minus 51, 113 is coming out of 145, sir. So you see that you just rethink and go through it, sir. My submission is like that we are earning from our operational part. Other income are subservient to this, and we are not dependent upon that. And that too, other income comprises mainly of the division. So we are not basically dependent. We are earning out of our operational income, and from 145 we have earned. And if we reduce the expenses around 53 and 50 odd crore, so 110. So almost 70% is coming out of operational income only, sir. So you please, go through it, my humble submission, so that it will be very clear to you, sir, on a deeper note. So we are on the operational income path only, sir.
Yeah, sir. Regarding this future prospects for that company momentum of mix of e-commerce business versus our marketing, what is the ratio you are expecting? Present ratio to continue, or you are expecting e-commerce to increase or marketing to increase in the future?
Let me tell you and let me make very clear. Right now, the philosophy of the management is not to expect any growth in the marketing. Only we are harping on the that segment, 110% BT segment, that is also getting very minuscule. So that is there. And so far, EA is concerned. E-commerce, our main thrust is right now on the e-commerce, and we'll keep on going through that e-commerce business only.
Okay. One more request, sir. Regarding this change in this result dates and this Concall dates, you are the last 2-3 days you are changing these things frequently. Please make sure that these things are not going to happen in the future. So we are missing out on these things because for that.
First of all, we seek our sincere apology to our investors. You are our oldest one of the investors that we have.
Yes.
It is a sincere apology. But, sir, you will appreciate that right now our CEO was unable to attend the Concall because of business reason only. He is attending a NITI Aayog VC on certain things that is good for our business. It is happening somewhere frequent, and we have got government nominee directors only. We have got a diversified field from where the directors are choosing. So sometimes this type of problem occurs. So we hope that it will not occur in a frequent manner, sir.
Okay. Thank you, sir. Yeah. Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, could you help us know what is the scrap volume trajectory, volume growth, QOQ, YOY?
So far the scrap volume is concerned, we are basically, if you ask me, so we H1 to H1, if we say we are on the higher path, and quarter to quarter also we say on the fatter trajectory because the rate of the scraps are little bit now cooled. Scrap iron ore, as you can see from the market. So with the same amount of disposal we are having with the same around here. So it is on a fatter trajectory, nothing significant so far these volumes are concerned. So
We got confused, sir. Sir, has scrap volume grown on a QOQ basis, or it has not grown on a QOQ basis?
Of course, it has not grown. I'm saying on a fatter means it is not grown.
And is it declined, and by how much has it declined?
So that particular figures are generally not captured in our accounting system. We go by the income. So income almost approximately that figures are available with us. So almost on the same trajectory. Almost on the same trajectory.
So scrap income is flat QOQ?
Yes, it is flat.
So there is a fall in the scrap realization, then volume should have gone up, right?
Of course.
Okay. You do not have the scrap volume for H1, right? Handy with you.
Well, handy, but basically we do not capture per se because the financial system captures certain billing and all these things. So it is basically that way. So we just make a rough estimate come out of that. So with that calculation, I can tell you that it is on the income is on the flatter path, and but I will say it is a growth because prices have gone down and we are on the flatter trajectory. So of course it is I will say it is a growth.
So what percentage of our revenue now is scrap revenue?
It is almost what we have told earlier. It is almost more than 50% we are deriving it from the scrap.
So if it is more than 50%, then it has gone up from 44-45% to 50% now.
No. Others we have got other segments now. Right now we have diversified into a lot of segments. Not only scrap. We have got our mineral blocks. We have got our linkage options. We have got our coal options. We have got our iron ore options. So lot of happenings are going on. New happenings are going on. So it is lot of things. We cannot survive in an environment only to depending upon the particular segment. So
sir,
we are going out of that and trying to venture each and everything what is available to us.
Sir, I am specifically asking about scrap sales. What is it as a percentage of revenue now? I can understand that mineral box and all, which go either in e-procurement or it goes in e-sales, right? It's not a part of scrap sales. Perfect. I am looking for what is scrap sales now as a percentage of revenue. And has it gone up?
It is, again, I'm repeating, my dear friend, I'm repeating one way. It is on the flatter trajectory and percentage is around 50 to 60% going on. It is there only. And it is on the flatter trajectory. It has not increased, sir. On a quarter to quarter basis, of course.
And on YOY? I'm asking on YOY.
YOY. So YOY, of course, scrap has gone up like anything. It is a growth of around 20 to 30%. 30%.
And what is the progress?
H1 to H1, if we compare from H1 to H1, it has gone up.
Okay, that answers my question, sir. What is now the private business as a percentage of our e-com business now? So we used to be 90% government or more than 90% government dependent. Has there been any progress on the private business?
No. We are steady with that. So we are steady with that only. We have got good clients in the private. So right now, the diversification will happen because that iron ore is now open. So we have tried to rope in some private players. So from next quarter onwards, that ratio will obviously change. Little bit increase in the ratio will of course be there.
So what happened with those MOUs with Larsen and Reliance and all, which we had announced, and they had talked about certain scrap to be auctioned from you?
We have not roped in more private clients than them. So right now we have got an opportunity, and we are trying to rope in certain private miners so that we can sell their producers.
When you are saying that you will maintain your top lines on a QOQ basis, are you seeing even more visibility on scrap volumes because the scrap prices are continuously coming down?
So again, I'm telling you, like that I already explained. Yes, you are absolutely right. The scrap prices are coming down. So we are trying to get some other business also in the mineral sector and other sector also. So that way we are trying to maintain our e-commerce steady income. That's why there is no growth. It is in a flattened part. So for Q1 and Q2 is concerned.
Okay, so lastly, in our e-com business, I know about scrap sales, which is purely linked to the revenue number or the scrap realization number. Right. You have another business within that, which is called as e-sales. Is e-sales a fixed fee based business, or e-sales is also linked to certain revenue number or milestone number, or it's just a fixed fee business?
Let me explain. It is basically mix of everything. Some kind it is a milestone based. Some places it is an event based. We get a fees based that you are rightly said, and some places it is like a scrap where we get income as per the outcome of the auction. It is a mixed bag, but maximum thing is going right now is basically on a fee base or event base.
In the e-sales business, right?
Yes, right.
So your entire fluctuation in number in revenue has to do with scrap sales and scrap realization and scrap volumes, right?
Not necessarily, sir. You are talking only about the financial terms. I am looking at it as a business terms. So if I say supposedly I get a more business in the scrap with a lesser prices, we can have a good volume. On the vice versa, if you go to the e-commerce e-sale business where we can get more business with more fees, so we can compensate that. So like these are the two parts. Which cannot be fluctuations can happen at any segment. It can happen in the e-sale also. It can happen in the scrap also, sir. It is of course a fluctuating environment. But what we can see from the trends that we are able to maintain the same trajectory in the last 3 quarters.
Lastly, have you formalized your dividend payout plan now?
Formalized means we have got a dividend policy backed by DIPAM guidelines. It is 5% of the net worth or 30% of the PAT, whichever is higher. So we are sticking to that. Last year also, it is a minimum, of course, dividend. So last year also we made the same dividend, both going the same. And this year, this first interim is when the path to that only. So that is the policy we follow, the DIPAM guidelines.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Parimal Yatish Mithani from Credential Investments. Please go ahead.
Yeah. Hello.
Yeah.
Yeah, so thanks for the opportunity and congratulations for good set of numbers. So I just wanted to know this provisioning of your, you're doing a provisioning as well as write back. So is it safe to say that they're done with the more of the provisions and the write backs now and the book is clean?
Sir, could you repeat your question, please, sir? Sir, I was not able to get your question, sir.
So can you hear me properly now?
Yeah, please.
Yeah, so in the cash flow, you done a write back of 88 crores versus a bad debt write-off of 76 crores. So can you explain that in the first half? And is it safe to assume that most of the write-off as well as write-backs have been done with?
Sir, first let me explain you that both side entries which is common, like 76 and 73, both are common. It is a compensating entry for probably taking the benefit of the tax. So writing off, provision no longer written back and writing off. And balance is, of course, we have realized a little bit of money in this H1 from the previous provision that we made in the marketing. Of course, that is very minuscule. So that's the thing. So, if you consider net result is the plus only, not the minus. So that is there, number one. And number two, this provisioning part, of course, we have gone away with those days, and there will be very, very minuscule thing would be normal in a particular business.
So can you give what will be the minimum amount will be if you can provide that for your contingencies? Just a fair estimate for us to know.
Pardon, sir?
You said so there will be little provision there. So can you give an estimate around? But last year you have done almost 228 crores. 280 crores of 260 crores of provisions.
Again, you are here. You are not able to understand. That the major part was that both side entries. You see that there was a debit, there was a other income, and there was a provisioning. If you minus that, so last year around figure will be 50-60 crore an hour. So we will not repeat that figure that we are repeatedly telling. So we maximum this quarter we had made a provision of only 95 lakhs. So that is there.
Okay, so in terms of second question, can you give in terms of e-commerce, how do you see going forward for next 3 to 5 years?
Sir, the basic phenomena is like that. We depend upon the market on the two things. Number one, for scrap disposal, how the industry performs. So here that although the industrial growth and output has increased, but scrap prices are not coming up, it is going down. So we expect that although there will be a scrap generation, but there will be a lesser realization. So and some businessmen, companies, they are also holding up their scrap. So it will be for better prices. So in the future, so it will be a better trajectory and other segment also. So we feel that it will be a better trajectory in the coming third quarter also.
Okay. And sir, can you provide the company's cash as of 30th September on the balance sheet?
Pardon? What is the company?
The cash that belongs to the company as of 30th September. Sir.
30th September that we have disclosed in the balance sheet, sir. It is there in the balance sheet, sir.
Net cash I am talking about. That is available to the net cash that is available, sir. If you can give it.
Net cash, you can minus the liability, the net cash available, sir. And you see that basically, if you see that our net worth, it is 584 crore now. Right now, we are there in the net worth. And if you go by the receivables and payables, so we are almost the net worths are backed by cash. But you have to do the mathematics. Right now, I am unable to do the mathematics for you because it is cash balance is around what we can see around 900 crores. There is a liability. There is something. So you can spell out from there, sir. So this is
Okay, sir. Okay, sir. Thank you very much.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Mayur Padwa from Sahasrara Capital Private Limited. Please go ahead.
Yes, sir. I have only one question. In your consolidated balance sheet, in the segmental results, you have shown 26 crore as unallocable expense, whereas in the standalone it's not there. So what is that? What expense is that?
That relates to, if it is in consolidated, that relates to, sir, our FSNL business, sir.
FSNL, but FSNL has actually shown operating profit of 12 crores.
Yes, that can be there.
No, but was there a profit or no then?
Segment-wise, you are talking about unallocable.
Yes, unallocable. So on FSNL, you have given 12 crore operating profit.
I am here with the consolidated results. Your segment revenue and segment tax. So where you are coming out with the expenses?
No, in your segmental result, in the consolidated side.
Allocated 26.78 crore. Okay.
Correct. So what is that?
Just a minute. And you see the standalone. Let me have the standalone figure.
8 crore. This is 8 crore.
In the standalone, it is 26.8 to other allocated. Correct? Right?
Correct. 8.87 crores. I'm looking at segment profit before tax.
You see what happens over. You see the trend over here. So over the years, what happens? Our salary, wages, and certain overheads cannot be allocated between the marketing and the e-commerce segment. So that's why it is unallocated part. It goes there only. Nothing else. If you see in the totality, it matches.
Okay.
Back to you. So in the coming days, when that marketing segment will be wiped out, so this confusion will go away with and everything will be dedicated to e-commerce. So this type of confusion will not also be there with you.
So by when you think this marketing segment will wind up?
So this is not in our hands so long as we have made a very stringent business condition and like we are doing only BG back transactions. So long as it comes in, we will not deny. But once it is fizzled out, we will not go for further ventures. It is all only backed by bank guarantee that we will do.
Okay. Perfect. Thanks a lot.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Sir, one question is, regarding this marketing business, a couple of years back when we started reducing that business, we were of the opinion that we will discontinue this business. I understand that now whatever we are doing is 100% BG back business, but are we going to discontinue this as well, or we will do this 100% BG back business?
Right now, sir, we have a mandate, and we are doing with 110% BG. So whatever it goes on, so it is a very safe and sound and time tested. So we are not in averse of doing discontinuing with this business. Of course, it is in a very, very small segment, and whole focus is on, of course, e-commerce. So if it comes on its own, we will not deny. But backed by 110% BG. That's
okay. And is it fair to assume that that business will not lose any money?
Right now, the trend is like that, and we have it is backed by BG. Security is the BG. It is one of the most secured instrument that at least in the Indian financial system do have. So we have taken that. So that is our way, but let us hope, and we are very much hopeful that we will not lose any money on that with this type of security.
Okay. And lastly, on the FSNL stake sale, any update you can give? Will that happen this financial year or anything you have update?
Sir, basically, you see, it is being handled by BPOM.
Yeah.
So under Ministry of Finance. So it will depend how the progress happens. It is all factors. So they are handling all these things. So we are only facilitating the whole process. So it is very difficult right now sitting today itself. So to tell that what will happen this year or that next year. But if anything substantial happens, of course we will get back to you. So hopefully in the next quarter when we meet, we will be able to throw some more light on this particular issue.
Okay, fine. That's it from my side. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Harshit Jain from REH Investment and Advisor. Please go ahead.
Yeah, my final question would be regarding the DRAT case, which is scheduled to auction our properties on 14th of November. So any update you want to share with all your stakeholders, investors?
Sir, we hope by today is the order date. So we hope that we will get the order by this evening. So we will be uploading that in the website only, sir. We are waiting for that written order, sir.
Okay, so any update you can share right now?
Right now, it is very difficult to share because unless I get that order is getting. I have been told that order will be uploaded very soon. Just my people are waiting there. So it is there. We will certainly keep you apprised, sir. It is a very important thing, and we will certainly update immediately to the stock exchanges, sir.
Okay, thank you. Thank you so much.
Thank you. Participants who wishes to ask a question may press star and 1. Anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you all. It was a very interactive and learning session for us. So we tender our sincere apology that our CEO could not attend this important investor call because his other meetings with the ministry. So we hope that you will be still have a repose of faith, keeping on reposing faith with this company. Thank you very much.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.